The market has been on a tear this year, and if you haven't been keeping up with our weekly top stock picks, then here are 6 of our favorite stocks from some of our most popular episodes that you can watch on our channel. These stocks all have something in common: a catalyst for price upside, strong growth prospects, and are attractively valued. First up is Carnival Corporation. It is the dominant player in the ETF space through its iShares platform and is benefiting from strong ETF inflows amid market volatility. VRTX has a near monopoly in cystic fibrosis, generating more than $10 billion annually from this niche. As of June 2025, Coinbase was the top stock in the S&P 500 for the year. The stock surged 125% in Q2 alone. Founded in 2013, Robinhood disrupted the brokerage industry with its commission-free trades, appealing to millennial traders. Key deadlines include July 9th and August 12th, which could impact market volatility. The market is anticipating a Fed rate cut in September 2025. While this could boost growth-oriented stocks, it might also signal economic fragility. Consider adjusting your portfolio accordingly. Be prepared to adjust your portfolio based on these developments. Use dollar-cost averaging to mitigate risks associated with high valuations. For the most attractive valuations, buy FedEx and BlackRock on dips and scale into Coinbase and Robinhood with tight stop losses. To hedge against potential downside, pair your growth-oriented stocks with defensive utilities such as Edison International, which was highlighted in our previous research. By diversifying, you can create a well-rounded portfolio that is better equipped to handle various market conditions. And if you want more ideas, please check out our most popular episodes. Thank you for watching and investing wisely. In 2021, the company went public at a valuation of $32 billion. However, its popularity waned due to outages and regulatory fines. Nevertheless, in 2023, Robinhood made significant strides by expanding its crypto offerings and fractional shares, attracting a new wave of users. The company has been focusing on growing its subscription revenue, which jumped 45% year-over-year to $415 million in Q1 2025. Despite its growth, Robinhood faces challenges. It has no economic moat and relies heavily on user engagement and market volatility. Morningstar rates it as a 1-star stock. The recent approval of its new drug Alefa expands the company's addressable patient pool by 31%. The strong balance sheet. VRTX has the financial flexibility to acquire smaller biotech firms with high-potential drugs. VRTX is also making progress in other areas, such as pain, where its drug Jornafs is gaining traction in the fast-growing opioid-free market. By 2026, VRTX expects to have 3 late-stage candidates, providing more options for patients and driving future growth. With $11.4 billion in cash, the company is well-positioned to make acquisitions such as its purchase of Alpine Immune Sciences for up to $1.9 billion. BlackRock is also expanding in fast-growing areas such as private markets and ESG advisory services. With $10.3 trillion in assets under management and a history of dividend growth, BlackRock looks poised for continued success. Over the past 5 years, BLK has grown its dividend at a 12% compound annual growth rate. Share buybacks have also been robust, returning capital to shareholders, and the firm is leveraging its Aladdin AI for risk analytics and client portfolio optimization. We upgraded this cruise operator to a 3-star stock in March when it hit a major catalyst. While the industrial sector has softened, FedEx has been able to cut costs and improve efficiency. E-commerce shipping volume growth remains robust at 8% year-over-year, defying macroeconomic headwinds. FDX offers exposure to an improving logistics market. Near-term guidance is lackluster, but long-term transformation could drive a re-rating. The company announced record 2026 bookings that matched 2025 highs, signaling sustained travel demand. Moreover, strong pricing power and customer deposits showed no signs of a slowdown. Smart money appeal. Carnival has upgraded its debt profile to near investment grade. This reduces interest expenses and increases financial flexibility. Morningstar believes this could lead to a high single-digit increase in fair value. Risk. High uncertainty rating. Fuel costs and economic sensitivity remain key risks. Next is FedEx. In May, we highlighted FedEx as a 3-star stock trading near fair value. In April, we featured BlackRock as a 3-star stock. Vertex Pharmaceuticals was another 3-star stock we highlighted in May. A top performer in 2025 so far has been Coinbase Global, which was a 3-star stock when we featured it in February. One of the biggest gainers in 2025 so far has been Robinhood Markets. Key market risks to monitor trade policy. U.S. decisions regarding China tariffs and trade policy have major implications for stock prices. Fed cuts. Valuation concerns. Currently, stocks like Coinbase, Robinhood, and Carnival trade at premiums to their Morningstar fair value estimates. Our smart money strategy: diversify across sectors. Combine healthcare with Vertex, fintech with Coinbase and Robinhood, travel with Carnival, and finance with BlackRock and FedEx.